we will be taking up for discussion. We will be taking up for discussion the exchange of PPE under Ind AS 16 as well as Ind AS 38. This is first one for PPE, the second one for intangible assets. So first and foremost thing, firstly we should understand that the exchange are of two types. What are the two types that you have? Existing PPE or intangible assets you give up, and another class of PPE and intangible assets you take up. So this is what we are going to understand as exchange. But normally people understand exchange would mean giving up old car and taking up new car, giving up old machine and taking up new machine. That is what they consider. So there we say that lacks commercial substance. That lack commercial substance. So let me just take it up from the beginning. Exchange of PPE under Ind AS 16 as well as under Ind AS 38. Exchange will normally be understood as giving some other asset, taking up some other asset is what we are going to mean. But normally people will understand that giving up old car and taking up new car as exchange. So that sort of thing is what we call it as lacking commercial substance. So giving up a different asset A, and giving up different asset and taking in altogether a different asset, say B. So giving up land, taking up plant and machinery. Giving up plant and machinery, taking up land. How we can say that sort of transaction is potent of, what is that? Potent of commercial substance. So the one I was just referring about old car, new car is lacking commercial substance. When you are doing it with different types of assets, it is going to be a potent of exchange. That is potent of commercial substance. That is what I mean. Reason is that this should be affecting operating cash flow after this exchange program. By giving up old car and taking up new car, will that be affecting your operating activity, that is operating cash flow? Answer to the question is no. By giving up our land and building, which was considered to be an investment property, and taking up in that place, yeah, plant and machinery would definitely be considered as increase in capacity that will result in increased production, increased sales, and that would result in increase in profit. And that sort of exchange is what we say as potent of commercial substance, and that is what they take it up as the exchange of assets. The same thing is applicable, the same principle is what you find it is applied both in Ind AS 16 as well as Ind AS 38. Now, what is the basic rule that we are going to follow? So, in exchange, the order is 3. You go by fair value of the asset taken in. The other one is fair value of the asset given up. If that is not possible, then it is based on carrying amount of the asset given up. This is the order in which You got to take it up. Now let us just understand what exactly they just say measurement of PPE acquired in exchange. So they go about saying lacking commercial substance and a fair value of both asset given up as well as received, not reliably measurable. And when fair value of the asset is reliably measurable, where we are expected to consider in this order, if an entity is able to measure reliably the fair value of either the asset received or asset given up, then the fair value of the asset given up is used to measure the cost of the asset. Unless the fair value of the asset received is more clearly evident. Now you can understand from this reading that this should be the first order. First order would mean when all the three are available, you have to take up this. Then if that is not available, then you have to take up fair value of the asset given up. If both are not available, then the new asset is brought into the books at the carrying amount of the asset given up. So is that the position the same in the case of intangible assets? So answer to that question is the same. No intangible asset can be recognized unless its cost can be measured reliably. If an entity is able to measure reliably the fair value of either of the asset received or given up, then the fair value of the asset given up is used to measure cost. However, if the fair value of the asset received is more clearly evident, then fair value of the asset received is taken up as cost. This is the same provision that you have both for PPE. So this is for PPE and this is for intangible asset. That is what I have summarized. But there is always a very important item that you should be remembering. So what is that? So when you are doing this, nowhere they have stated in the accounting standard as whichever is higher or whichever is lower. But I am introducing a principle called as whichever is lower. And to prove this, I will tell you how through an example. Supposing the fair value of the asset is given that is taken in is 20 lakhs, and if the fair value of the asset taken up is 18 lakhs and fair value of the carrying amount of the asset given up is 5 lakhs. Now, what is that entry that we are expected to pass? If you go by the accounting standard directly, you will be landing yourself into a trouble. And Institute had solved it so nice in one of the illustrations to convey that point, but in the theory it is not mentioned. Now, I am just highlighting that particular gap, or I am just filling that particular gap where I am saying between the two, whichever is lower is what we got to take up. Now let us pass a journal entry. Let us assume that asset taken in is A and given up is B. Correct. Now let me debit asset A. Asset A, credit asset B, and credit gain on exchange. If you go by this principle of what they've said, if I take up this as 20, carrying amount of this will be 5 and the gain will be taken up as 15. But the entire Ind AS is based on one important thing, that being fair value. Now, definitely I would just say the gain cannot exceed 13 lakhs, because when you say gain on exchange, what did you exchange is asset B. On account of that, this is only 13. So therefore, I would say it is better you use this particular thing as whichever is lower. If this whichever is lower concept is there, people would automatically be taking 18 and 5 and 13. People might definitely be asking, sir, what is the problem in taking up asset A at 20 and credit asset B at 5 and credit gain at 15? So the problem is that whenever an asset is bought, you cannot have profit to be booked unless it is business combination. Why then we are booking up gain in this particular case is that it is not asset bought, it is asset exchange. So therefore, we are expected to lower between A and B, whichever is lower, fair value of the asset taken in versus fair value of the asset given up. So why did the institute not mention whichever is lower? Could be this particular reason. For example, instead of 20, if it were to be 17, then the journal entry will be debit asset A 17, credit asset B 5, and credit gain 12. So here the maximum limit is only 13. The gain is booked only to the extent of 12 because the asset value for A is determined at 17. That is the reason as why in some of these accounting standards, a gap that you find, what students would find it difficult, those areas I thought I will highlight and put it in the form of video. Now I will tell you as how institute did not follow this on a consistent basis. For PPE, they did this particular thing. Let us just go through this question. The exchange of assets. Pluto owns land and building, which are carried in his balance sheet an aggregate amount of 10 million. The fair value of such asset is 15 million. It exchanges land and building for a private jet, which has a fair value of 20 million and pays additional 3 million in cash. Show the necessary treatment as per Ind AS 16 and pass journal entry for the transaction. Now, if the jet is going to be the asset coming in 20 million at which it was not debited, correct? I have told you in the notes that we are expected to update at fair value the asset taken in. That is correct. That is what in theory also they have mentioned, which is more clearly evident, which is clearly evident. 20 million. But they are not debited for 20 million. See, it is all something like when you complete a deal, when you know the price of a product, if it were to be 20, but you are just paying 3 and giving some other asset for 15, and you say the deal is over, when the other person is accepting, naturally it is not 20, it is only 18. That is 15 plus 3. That is what this particular matter is communicating as whichever is lower. If you strictly adopt institute prescription, we will be debiting this particular asset for 20. By doing that 20 and crediting PP at 10 and taking up cash at 3, our profit on exchange will be taken up as 7. You can't make profit on purchase of an asset, but you can make profit on sale of an asset. So in the process of sale, the difference between the fair value of the asset given up and the book value of the asset given up is just 5. That 3 rupees is an additional payment that is being made to satisfy the purchase consideration. So let me sum up. When you have two items, fair value of the asset taken in, fair value of the asset given up, between the two, you are expected to book the asset which is coming in only the lower of the two. So keeping this principle, if you or analogy, if you take up Ind AS 38, Ind AS 38 is also communicating that, but institute did not given a consistent answer. So let me just repeat as far as the previous example is concerned. You understand that the fair value of the jet is 20, but it is taken up at 18. The breakup of 18 is PPE private jet 18, credit the carrying amount 10, credit the cash that you provided, and credit the profit on exchange, that being 5. So where from you just get that 5 as exchange gain, the difference between the carrying amount and the fair value. So apart from that, they have just given 3 rupees. So you please understand that they are recognizing the PPE not at 20 but only at 18. This is what you have as a principle. Now let us take up Similar example in the case of Ind AS 38. Look into the problem. Sun Limited acquired software from Earth Limited in exchange for telecommunication license. The telecommunication license is carried at 5 lakhs in the books of Sun Limited. Software is carried in the books at rupees 10,000 in the books of Earth Limited, which is not the fair value. Advised journal entries in the books of Sun Limited and Earth Limited. If you take up Sun Limited books, it acquires software. Software is booked at 5 lakh and 20,000. But they have not debited for 5 lakh and 20,000. As I told you, in accordance with this principle, asset taken up and asset given up. Between the two, whichever is lower, 5 lakhs at which it is debited and credit is given to the asset which is given up, whose carrying amount is 5 lakhs. There is no profit or loss. Now go back to Earth Limited, where Earth Limited is buying telecommunication license, whose fair value is given at 5 lakhs. So instead of debiting at 5 lakhs, they have debited this at 5 lakh and 20,000. So which is not correct. So what they are getting in is telecommunication license. Fair value of the telecommunication license only they should have taken up at 5 lakhs. And credit is to be given to software for 10, and credit is to be given for exchange gain to the extent of 4 lakh and 90,000. So this is the place where they went wrong. Okay. So similar scenario in two different accounting standards, same treatment they should give, but institute had just provided a wrong guidance to students. Now coming back to this original discussion that I was just making here, instead of booking at 20, we have to book it at 8 is what I just mentioned. Now imagine that fair value of the asset taken up is 17. Fair value of the asset given up is 18. If that be the case, the journal entry will be debit asset A 17, credit asset B 5, and credit gain 12. So therefore, the underlying fact that you should always be remembering is that when you are given with fair value of the asset taken in, fair value of the asset given up, you take up these two and find out whichever is lower, and that lower figure is what you are expected to debit. And though they have not used that term as whichever is lower, but that is what practically is possible. I am telling you a very important fact that when you have an asset which is having a fair value of 20, and when you give up an asset whose fair value is 18, when there is no cash transaction between them for the difference, what I have just given up is what we are going to take up. It is all something like this way. I am coming through an auto rickshaw. In Chennai, auto rickshaw is going to be very costly. They are going to ask for your property, which I've experienced in another place also, in Coimbatore also. These two places where auto men are very notorious in the country itself. Okay. Now, I am giving 100 rupees chain for 80 rupees fare. So, what the automan is saying after dropping me down is putting a salute saying that, good night, sir. Have a nice sleep. And he writes and he never bothers about 20 rupees to be paid. Now, tell me what is the transaction value? Is it 80 rupees or 100 rupees? It is all what you pay is what you have to consider. So, likewise, when it is 18, as far as the fair value of the asset given up, that is what you have paid. When you know the fair value of the asset as 20, you cannot be booking it at 20 and account for gain on purchases, that being 2. And gain on purchases can be done only in business combination, and you cannot dream of booking gain upon purchases. That is the reason, that is the underlying fact that you should remember that whichever is lower principle is what you are going to adopt, and you cannot be applying the principles given in accounting standards prima facie. So these are the facts that you should be remembering when you are taking up problems involving the exchange of PPE and intangible assets. I hope that these examples that we have given, that is taken up for our discussion, will clarify the doubts that we have in these two accounting standards. Thank you.